Bitcoin has gone to the right for the most part for most of its existence, with price going from virtually zero to $60,000 in less than a decade. The original cryptocurrency is now one of the largest currencies in the world and has become one of the most profitable assets of all time in its short life. Despite this growth, Bitcoin critics have long argued that it is only a matter of time before it goes back to zero. Former Bitcoin Cash supporter Calvin Ayres said in July 2020 that Bitcoin was worthless, while Berkshire Hathaway CEO Warren Buffett told CNBC that he considers all cryptocurrencies, including Bitcoin, worthless. Buffett's business partner Charlie Munger called Bitcoin rat poison and shit. But in recent months, there has been a flurry of institutional investment in Bitcoin, with companies such as MicroStrategy, Tesla, Square, and Acre ASA buying Bitcoin corporate treasuries. Meanwhile, exchange-traded Bitcoin products have exploded, with the launch of the Canadian-purpose Bitcoin ETF, the first such product to be established in North America. Such institutional investment is widely believed to be the run, and it is considered proof that the currency, which now has a market cap of over $1 trillion, is here to stay. But what would it really take for Bitcoin to lose 100% of its value? Ultimately, a lot. Can Bitcoin really drop to zero? In 2018, two economists from Yale University, Yukun and Aleh Tsyvinski published a report titled Risks and Returns of Cryptocurrency, in which the authors looked at the risk of Bitcoin crashing to zero in the space of a day, using Bitcoin's historical returns to calculate the risk-free catastrophe probability. The authors found that the probability of an unspecified catastrophe crushing Bitcoin to zero ranged between 0% and 1.3%, and was about 0.4% at the time of publication. In comparison, Tsyvinski said in an interview with YaleNews that the euro has a 0.9% chance. Others argue that Bitcoin will eventually sink to zero because it has no intrinsic value. But proponents say Bitcoin is backed by consumer confidence in math. Although Bitcoin is often presented as opposed to government currencies, Bitcoin and fiat currencies such as the United States dollar, USD, and the British pound, GBP, which were once backed by gold, which has intrinsic value, are now supported by none. Physical product. Of course, some would argue that at least the US dollar is debt-backed. Common arguments against Bitcoin. One of the most frequently cited arguments for Bitcoin's possible demise is that it is actually an elaborate scam concocted by some nefarious entity or group for the purpose of separating users from their hard-earned money. One of the most recent examples of this can be seen in an article by iOS developer Gaurav Sharma, who claims that Bitcoin is actually a modified Ponzi scheme. He argues that Bitcoin development is far from decentralized, but is in fact overseen by a central committee of developers, which he believes only benefits the powerful. This ignores the fact that any knowledgeable person can submit a Bitcoin improvement proposal, BIP, for review, and that the entire protocol can be relatively easily forked if unwanted changes are made. With Bitcoin, all nodes and miners are free to choose which client they run. The client with the most combined work automatically becomes the canonical chain. As a result, the Bitcoin unit in these chains will almost certainly still have value, due to the computational work and resources required to maintain network integrity. Another common argument from Sharma and many other skeptics, including Warren Buffett and Mark Cuban, is that Bitcoin is simply overvalued because it has little or no use. However, it can be argued that the usefulness of Bitcoin is actually directly related to the number of users. This can be seen with the advent of additional use cases for cryptocurrency, where cryptocurrency was initially used for peer bartering before online trading became a thing. And now there is an entire ecosystem of DeFi tools expanding its usefulness even further. A similar phenomenon is described by Metcalfe's law, which states that the value of a network is proportional to the square of the number of users connected. And with the number of Bitcoin wallets growing exponentially, Bitcoin's utility is growing even faster. Scenarios: if Bitcoin really fell to zero, it would either mean that it became impossible to exchange Bitcoin for goods and services, or that liquidity on the buy side fell to zero for some reason. One of the few plausible scenarios that could cause this is if Bitcoin bans, which could make its possession or use illegal, as is already the case in a handful of countries. It would also require shutting down the entire Bitcoin network, taking all nodes offline, including those in space, and making new ones impossible to create. Theoretically, this would make it impossible to transfer Bitcoin and prevent underground trading, likely rendering Bitcoin worthless. But that would be nearly impossible to achieve. The decentralization and global proliferation of network nodes is the entire value proposition of the Bitcoin blockchain. Another possibility is that Bitcoin could easily be replaced by a better cryptocurrency or similar alternative payment system, rendering it obsolete and therefore worthless as a payment method or store of value. But this scenario would likely take many years, if not decades, to materialize. Regardless, it seems likely that Bitcoin will always retain some value, either as a collector's item or as a historical artifact for generations to come. A similar phenomenon was observed relatively recently when the Reserve Bank of India, RBI, demonized due to a massive increase in counterfeit notes. Although genuine Rs500 and 1000 notes can no longer be used as legal tender in India, they still retain some value as works of art or curiosities.